Good day, trader, and welcome to the first webinar for June. Today I'm going to be talking about decompounding your portfolio, which is a word I made up, and I'll explain in a little bit. But the thing is, we've entered very turbulent times, okay? Not just on the JSC, not just with the Forex market, but with the entire world. We got Brexit in place, which is affecting the pound. We got the recession that's just been confirmed in South Africa. We got Moody's that keeps downgrading our banks. And we've got Trump's tweets and erratic decisions on not a weekly basis, but a daily basis. So we've entered unprecedented times where anything can happen. And I want to prepare you for the inevitable drawdown, which means you're going to be having consecutive losses sometime in your trading career. Okay? Now, I got a question the other day, and that was, Timon, do you sleep easy knowing what's going on in the world? And my answer was, absolutely. No matter what's going on in the world, I'm able to sleep easy with winning and losing trades. I've been able to do this for the last 13 years, and I'm going to explain to you how and why. So psychologically, if you are not sleeping easy, it means that you are putting a lot of risk on the line. And by risk, it can be an emotional risk where you've put in finances that you can't afford to lose. You've also got maybe a mental ego that's in your mind, factor that's in your mind where you're saying you don't want to lose. It just means that you're not ready for the trading world, because everything in life you're brought up to win. You're brought up to have the best education. You're brought up to have the best car and the best house, and then to have the best, to look good on your Instagram, to take selfies. You're just, in your mind is always win, 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 no matter what, okay? With trading, unfortunately, to win, you have to lose a little bit. And sometimes it can be over a consecutive amount of time, and other times it can only be in, a couple of times in a month. So when the market is not favorable for trading, you need to have the entire game plan in place. And that is why I sleep easy, because I've got an entire game plan planned out from the best case scenario of what can happen in my portfolio to the worst case scenario of what can happen in my portfolio, and how I can prevent the portfolio from ever dropping more than I can handle, okay? And to do that, we do the first thing, and that is we risk 2% of our portfolio per trade. Okay, so let's start out with a normal size portfolio, which is the average portfolio size my subscribers have with Red Off Storm Trader and Forex Trader, and that's 10,000 Rand, okay? So we put in 10,000 Rand, and we automatically know how much we're willing to risk in that trade. Whether you're trading CFDs or currency futures, or whether you're trading even shares, whatever you want to call it, if you want to use the 2% rule, it works throughout all the financial instruments. So we've got our 10,000 Rand portfolio. You want to risk 2% of your portfolio per trade, which means that you're willing to risk 200 Rand. Okay, it's nothing. It's maybe a couple of burgers at McDonald's. So you risk 200 Rand, and let's say you lose that trade. Your portfolio is down to 9,800. So the next time you trade, you need to risk 2% of your portfolio. But it's not of your previous portfolio that you had, it's of your current portfolio. So you will be risking 2% of your new portfolio, which is 9,800 Rand. So that 2% means that you'll be risking 196 Rand, correct? And if you lose that amount, then you're down to 9,604 Rand on your portfolio. So then let's go all the way down to 13 losing trades in a row. And I've just done these formulas on Excel just to show you how it works. So now the third trade, you have 9,604 Rand in your portfolio. So 2% of that is 192 Rand. You see how you're risking less than what your previous portfolio was? Because just like the gambling mentality of I've started with this amount, and even though I'm down 80% of my money that I started with, I am going to get that portfolio up. It is the incorrect way of thinking. What you need to say is that this is the money I have now. What can I do to grow it slowly but consistently? And that is by using the 2% rule with trading, or you can use maybe a 5% rule with investing. And with gambling, if you can just make 20% of the current portfolio that you lost, that is winning. That is the way you've got to think. Because if you can double your portfolio with gambling or with trading and investing, unfortunately, you are also increasing your risk. So keep consistent with one rule. So it can be the 2% rule, 5% rule, whatever you want to call it. I call it the 2% rule, and this is what I've been following for 13 years. So let's say you're down in your portfolio 12 losing trades in a row. Okay, it happens. It really, really does happen. What does that mean? It means that after 12 losing trades, you're only down 2,000 Rand of your portfolio. Now, that's not bad, considering that if you take one trade a week, in 12 weeks, you're only down 20% of your portfolio, okay? Compared to with investing where you would normally risk 5 or 10% per investment, you could be down to 20% of your portfolio in 2-3 weeks. So you can see why I trade instead of invest, because I can manage my portfolio a lot better, especially with CFDs. So if you're down 12 losing trades in a row, then that means you are down, let's see, so 21.5%. Now, is that a lot? Yes, but you are in a drawdown. So what this means is that this follows the idea of business. You sometimes have good months with business and you have bad months with business. But when you're down more than 21%, now you have to take drastic action. So what happens when you're down 12 losing trades in a row or you risk 21.5% of your portfolio? Very easy. Stop trading. Not stop trading as in completely forever. All I mean is that stop trading your real account. Keep paper trading until the market rectifies itself. If you have a winning trading strategy and you know it's been working over a number of environments over many, many years, then keep to that account. Don't go back to the drawing board. Drawdowns are inevitable. This is the real trading world, okay? No marketing, no 100% win rate, no making money very quickly. Welcome to the real world of trading. Keep paper trading until the market rectifies itself, and this will prevent you from ever blowing your account and it makes trading a lot easier. This is where you can also sleep easy no matter how bad the markets are reacting. Okay? So normal drawdown is around 5 or 6 losing trades in a row, where you're not even down more than 1,000 Rand of your portfolio, okay? Or 10%. So that's perfectly normal. But when you get to 12 losing trades in a row and you know you've got a winning strategy, just stop trading your real account. Keep paper trading until the market rectifies itself. And then when you see your equity curve starting to turn up and the environment of the market is looking more conducive to trading, then you can start putting in money. Okay. Now, what if you are feeling emotionally involved with losing 21% of your portfolio? You don't want to lose that ever. This is also something that I get. And then I say very easy. Instead of risking 2% when you've entered a drawdown, risk 1%. Maybe risk 0.5%. Whatever you want to do, just so that you can handle those losses a lot better. Okay? It's easy to make money in favorable environments. You're just following the system. But when you're losing money, you need to use very strict money management rules so you can help your portfolio. And this is essential now that we are in unprecedented times with trading the markets. Just like someone says, Timon, does trading become the same? Yes, it becomes the same with certain principles, such as the strategy is the same, the risk management principles are the same, but the overall market's movements changes. And that is something that is going to happen for the rest of our lives and lives going forward, because the market is constantly in different forms of demand and supply, and there are algorithms that are triggering the markets that are making it move differently, which means that your biggest drawdown is still to come. But your biggest winning days are also still to come. The difference is you can manage how much of your portfolio you're willing to lose until you stop trading a real account, and then you paper trade until the market rectifies itself. As with the best case scenario where the market goes up, well, that is the point that we're in this trading game together. So why do I call it decompounding? I know it's a word I've made up, and probably the linguists and those that have studied English would say, Timon, you're completely wrong. But the way I see it is compounding your portfolio is where you're using your money to grow it. And then of that money that you've grown, you're trying to grow it even more. And I find it like a positive word, compounding your portfolio. Decompounding your portfolio is where you're using your current portfolio of what you lost, and you're risking the percentages on your current portfolio. And it's not just with trading and investing, can also be with gambling, can be with anything financial in your life that involves risk. Okay? So decompounding is where you're compounding, but it's going the opposite way. And this way, you can save yourself from ever blowing your trading account. Okay, so I hope you enjoyed this video. I've been wanting to do it for a long time, and now that we are in these times with the JSE and the forex market and the normal markets and the politics, and things are just going crazy at the moment, this is how to protect yourself in dire terms. So have a fantastic time. Good luck with your trading, and we will chat very soon.